I think we have another Bitcoin winter starting in late October. And I think this time, will we go from 100 to 200? I don't. And why don't I? Because I think we don't have as much leverage this time. So I think we get to 170, 175, pick a number. And then we have a correction, but it won't be as big because we won't go up as high. Now, if we went to 200 or 220, then we have a 70+% correction. If we go to 170, maybe we only have a 40 or 50% correction. But if we don't ever get to 175, and, Metcalfe's law number just keeps going up and we get to 120 by the fall and we're only at 125, then we won't have a correction.
Mark Yusko opens with a bold statement. We are living through one of the most critical and fascinating periods in global finance. Around the world, central banks are rapidly expanding the money supply. China is printing more currency. Europe is following suit, and the United States is actively discussing similar measures. This coordinated monetary expansion is reshaping financial markets. In such an environment, assets that are scarce, durable, and cannot be artificially created, such as commodities and certain alternative assets, are likely to gain significant value and attention. Like and subscribe. It's the only thing not losing value these days.
I mean, look, this is a really, really interesting time around the world. You got money supply rising globally, so that's good for all digital assets and all assets that are commodity-like. And what do I mean by that? So take gold, right? An ounce of gold is always an ounce of gold. It doesn't change, it doesn't grow, it doesn't get more efficient. And so for 5,000 years, that single ounce, if you gave it to somebody, they would give you essentially a fine person's suit, literally from Cleopatra's time to a suit of armor to, Savile Row today. And so things that hold value, Bitcoin being digital gold, right? It has all the qualities of gold, but it's better in that it's more divisible and more portable. And so I think for the next 5,000 years, it becomes the digital version of that as we move into the digital age. And so when I look at that market and all markets related to commodity-like assets in an expanding monetary supply scenario where you got China printing and the US talking about printing, Europe printing like crazy, those assets are going to rise. And gold's had a great year. In fact, most people have no idea. Gold has outperformed stocks for the last 25 years, compounded. Like, no, it's not true. Well, it's because, again, the gold didn't change. What changed is the number of dollars you need to buy the ounce of gold. So here's a fun fact, less fun if you are actually a stock investor. Equities, people say, oh, they're all-time highs. No, they're not. They're actually the exact same price as 1996 priced in gold. Price in dollars, they're all-time highs, but the dollar buys less. I saw someone this morning tweeted, 2 bagels and a cup of coffee for $32. What the absolute hell? I mean, and so inflation is theft, literally. What do I think about the markets? Well, what I think about markets is in an environment where currencies are being devalued because countries are too far in debt, and you've seen all the nonsense going on with Elon tweeting about, the silly budget, the big, beautiful bill. I mean, here's a guy who ran, not Elon, but Trump. Here's a guy who ran, drain the swamp, get rid of all the graft and corruption. And then he passes the big, beautiful, or he promotes the big, beautiful bill with a $2.5 trillion deficit. Are you fucking kidding? Sorry. Are you kidding me? I mean, he's the biggest. You're like, I'll say what you want to hear, but I'm going to do all the bad stuff as long as I get paid. So what's going on fiscally around the world is so irresponsible that you can't help but want to protect yourself by owning assets like Bitcoin or gold or real estate or fine art or jewelry or whatever it is that is scarce. So anything scarce, I want to own. Anything you can't print, I want to own. Now, that doesn't mean all equities are bad. Overpriced equities are bad. Like, people love CoreWeave. But I love it. I know you understand you love it because it's going up. number go up, everybody loves. I loved your intro. People want generational wealth by next Monday. I love that. And by next week, I do think this year plays out in two pieces. So I think equity markets will be volatile. I think bond markets will continue to get whacked. I think I'm of the belief, and I know people hate me for this, I think the 4-year cycle is not dead. I think we have another Bitcoin winter starting in late October, maybe. Why that? Well,
why that?
Well, it's a 4-year cycle, but it's not exactly 4 years. It's 3 years and 11 months based on the number of blocks. And so, the first one in 17 was December, then 21 was November, 25 to me is October. Again, based on history, that's what it tells me. And the size of it depends on how crazy we go between now and then. Mm-hmm. Historically, summer is kind of like this. It's like a roller coaster, up and down, but you end up in the same place, right? And then in the fall, between kind of September and Thanksgiving, you have the crazy ups. So in 17, we went from 10 to 20. In 21, we went from 30 to 60. And I think this time, will we go from 100 to 200? I don't. And why don't I? Because I think we don't have as much leverage this time. So I think we get to 170, 175, pick a number. And then we have a correction, but it won't be as big because we won't go up as high. Now, if we went to 200 or 220, then we have a 70+% correction. If we go to 170, maybe we only have a 40 or 50% correction. But if we don't ever get to 175, and Metcalfe's law number just keeps going up, and we get to 120 by the fall, and we're only at 125, then we won't have a correction, and then it'll just continue to rise. But that's my base case.
Yusko emphasizes a key principle in investing: don't average down on losing trades, unless you've done your homework and truly understand the asset's long-term value. In most cases, if the market moves against you, it's likely you're wrong, not the market. He echoes Paul Tudor Jones's famous line, "Losers average losers." It's a risky habit that has wiped out many investors. On the other hand, Yusko highlights the importance of pressing your winners. His mentor, Julian Robertson, taught him to build on positions that are working, because momentum and conviction should be rewarded. Now let's go back to the interview.
Investing, two things are really, really important. One is what Coach Smith, the legendary coach here at North Carolina, said, which is when you make a mistake, which you're going to do, right? Ralph, recognize it, admit it. Oh, that's the hard part. Learn from it. That's actually the easy part. Forget it. Hardest part. And the reason the forgetting is so important is what that other coach down the road, Coach K, said, is what separates a good player from a great player, or a good investor from a great investor, is greats always focus on the next play. And how many times you watched a basketball game, someone misses a shot, they go down and commit a stupid foul because they're thinking about the last play. What a great player does, they don't even remember taking the shot. They go back, play good defense, steal the ball, make a layup. Michael Jordan said it, like, I missed 19,740 something shots. I don't remember taking any of them because he wanted to take the next shot because he was sure he was going to make it. Now, sometimes you don't. And so you'll want to have that ability to try new things, to keep pushing forward. But when you make a mistake, admit it. And this is a big thing on investing, is everyone thinks, well, you should double down, right? When something goes against you, I'm just going to buy more. Well, yes and no. I mean, if you've done the work and you know the value of the asset and it gets cheaper, okay, you could argue that does make sense. However, the market's saying something that you missed, because the market's never wrong. So, well, I'm right, the market's wrong. You're just wrong. So there's a famous picture of Paul Tudor Jones, famous hedge fund guy, in his dorm room at UVA. And it says, "Losers average losers." And it's so true. And that's particularly true in trading. Like in trading, you're never right and the market's wrong. You're always wrong. Just If something goes against you, get out. Just put on another trade. And if that goes against you, get out. Because if you keep doubling down, you're going to end up in a hole. And the difference, between a trader and an investor is a trade that's gone wrong and you become a long-term investor. But the opposite of this is winners press winners. And this is something that Julian Robertson, who was my mentor, was so great at, is when something's going your way, you actually want to do more. No, Harry Markowitz, and you studied on Dr. Markowitz, and he says you should rebalance. Yes, you should. And on a periodic basis, you should rebalance. But rebalancing is more about your stay rich money. Remember, and I think we talked about this last time, is you got your liquidity bucket that funds your lifestyle. It's got a hole in the bottom. And then you got your get rich bucket, which is to do all the fun stuff, generational wealth by next week. The stay rich bucket, which again, most young people don't have yet, right? We're still in the get rich. I still consider myself young. I don't look young when I see myself, but I feel young. And the key is the get rich stuff, you want to press your winners. And you want to have that ability to really go along with things that are working in your favor. Now, eventually you do want to take some profits and redeploy into other ideas. And at some point, when things get so out of whack, like CoreWeave today or NVIDIA even today, it's not that they can't go higher. It's just that mathematically, if I could find a smaller cap version, and I think, maybe this is a great segue, anticipating a question you told me you were going to ask, is so many people are invested in Bitcoin, right? And either they have, Coinbase account, and that's not really Bitcoin. Sure it is. My dad has a Coinbase account. He loves it. He's never going to have a ledger. He's never going to hold his own keys. I'm not going to hold his own keys.
He shouldn't though, right?
He
doesn't
shouldn't.
need to.
He's 87 years old. He should not.
Yeah,
No. Now, if you want to hold your own keys, have your own, that is the future. Yes, that's beautiful. Now we have to fix some of the UI UX problems, but there's different things that make sense for having Bitcoin.
Yusko wraps up with a discussion on Bitcoin custody. He points out that many people hold Bitcoin through centralized exchanges like Coinbase. While this is technically ownership, it's not the same as controlling your own keys. For older investors, like his father, custodial solutions are practical, offering simplicity and security. But for younger, tech-savvy individuals who value sovereignty and decentralization, self-custody is the way forward. Don't stop now. This next video is where it gets even better.